Well, I have to say precious metals and silver, gold, platinum, and palladium are like poison ivy. Poison ivy gets under your skin, and it's like it owns you instead of you owning it. And a lot of people are like that. They actually have a almost like a fetish for silver or something. And no matter what it does, silver can do no wrong. But over the next several years, the precious metals have a lot more room to run. I said it many times before, but watch for various correction points, and you might want to sell some when you get super stellar gains. But nothing's been going on. There's been small gains up and down, and it's like real guesswork. If you're going to just jump out of the metals right now and wait for it to drop, you could be wrong. You could be wrong. You could be right. You could be wrong. But then again, if you're jumping out right now and you're waiting for a lower entry point, well, what entry point would that be? Does it necessarily have to go down to even 26 or 27? Not really. Not really. It might just go down to 30 for all I know. So, it's like if you missed the boat, you missed the boat. So the only way to stay in the game is to hold. Since you're not holding leverage, you're pretty safe. That's what I have to say, because the overall trend is definitely upward. Now, I want to point out something else about Sprott's fund here. If you're like me, I'm holding this fund. I have some of this fund, and I jumped out of it, then I jumped in it, and I got it a little lower, but it's even lower than when I bought it, and the premium's down. But I can tell you this: for anybody that's not in this fund, for the premium to be at 1.5% on this fund, it actually was up to 31% at one point in time. It usually runs, I don't know if it has it down here. So usually it runs around, 12 to 15%, right? That's usually roughly where it is. So, being at 1.5%, if the price of silver starts moving up again, I expect his premium to move up again a lot on his fund too. Due to the other thing is too, if the price of silver, say, dropped a little bit more, already coins are like almost impossible to get, like the good stuff, like the American Silver Eagles. You're going to pay a big premium. Canadian Maple Leafs, pay a big premium. Like the private mints, you can get that stuff no problem. But right now the stuff that's more desirable is getting tougher and tougher to get. Like the supply of silver is not running out, but there is a bottleneck getting enough coins out there to the public that's looking for an investment. So his fund isn't bad right now at all, because the premium is very low. So if you see silver move up, if you want to speculate a little bit, this probably wouldn't be a bad deal at all, because the premium should go back up to about 12 to 15% or maybe higher as silver moves up, and you'll get your gain on silver plus your gain on the premium. Now today, stuff is looking bad on all the metals, but silver took a major hit today. But it's like unpredictable, isn't it? Isn't it? On a daily basis, it's unpredictable. I would not just jump out and actually wait for a major pullback, because one thing that Mark Farber said that I really keyed in on is that he's afraid to even short the equities markets, which he believes will have a 20% correction. So if he's afraid to short the equities market, if you jump out of your precious metals positions right now, in effect you're almost taking a short position, because you want to jump back in, assuming you want to jump back in lower, you're speculating that it's going to go lower. That could be, it could be, but then again, it may not be. But considering Mark Farber thinks equities are like the worst place, U.S. equities are the worst place to be, even though they might go up a little more, he's afraid to short them. Would you want to short precious metals? I wouldn't. I could be wrong about this in a very short term, but considering some things that Max Kaiser said, and I'm actually reading between the lines with what he says, because now I realize that buy physical silver to break J.P. Morgan was a pile of garbage as far as I'm concerned, and whatever you could think of that. But he's talking about silver going up quite a bit, possibly in April, and this coincides with the debt ceiling fight. So I think that's a major possibility. Now, Bill Gross talks about something else here. Bill Gross from PIMCO. I want to talk about him. He's pretty damn good. He gives you some good information a lot of times. He's wrote it on his site. He talks about credit supernova. In other words, there's so much credit out there. We got this big Ponzi scheme going where there's actually credit being issued just to pay off the interest on the old credit. Not just with governments, but with individuals, families, people, corporations, and everything else. There's a credit supernova in the works. He shows that Bill Gross states, the countdown begins when investable assets pose too much risk for too little return, when lenders desert credit markets for other alternatives such as cash or real assets. Now, they're already in cash. They're flush with cash. Lenders are flush with cash. When I say real assets, it may not just be gold, silver, platinum, and palladium, but they will be options that they can go into. But it's going to be like oil, lumber, other mining assets, and agriculture. Probably agriculture, probably a very strong one. So I would imagine that, as this credit blows up, and that's what he's talking about, asset prices are going to skyrocket, and among them being precious metals. So this is a good sign. You don't know when this is going to happen. I have to say that, when people were in, the Dow, and it was in its long bull run at the time, years ago, the Dow was in a long bull run at the time. If you jumped out of the market and you missed certain time frames, you missed the big moves. And that's exactly the way it could be with silver too. Silver's going to take off like crazy at one point in time. And if you miss it, or you start thinking, oh, it's too high to get into now, I could have bought it lower, well, you're screwed. You're screwed. So it's a patient hold. It's not for everybody. That's all I gotta say. Now, I want to point out something else about Sprott's site. Eric Sprott. He's got a pretty good chart on here. This is actually older data from 2011 about platinum and palladium. Now, palladium and platinum is not the super screaming buy it was, because when it was like much lower than gold, it was a really good deal. Now it's a little more than gold, but it's probably still a good buy, but it's not as good a buy as it was before. It's always a matter of price. It's like, if you go to a car dealer and you say the best car is some type of Mercedes or Lincoln or something, right? But you can get an economy car that's because it's 50% off. You go with the 50% off. You know what I mean? It's always like price has to have everything to do with value. So, but still, it's a good value. I think the big value is your palladium. Now, this is an older chart from 2011. And I knew these statistics before. I got them. I must have got them from the same place he got these from, because palladium in 2011 actually had a 6% disinvestment. Investment actually went down. Actually, they dumped palladium big time out of the investment market in 2011. In other words, it hit 850, 870, and people sold it, and then they got out of it, and it corrected down to like 5 something. But palladium, 71% automotive. Chinese automotive industry still going very strong and increasing. Jewelry, 6%. Industrial, 29%. That's 106%. And the 6%, the reason it's 106%, there was a 6% disinvestment. But this is 2011. 2012 stats are not out yet. But there's bigger demand for palladium and platinum this year, 2012. Actually, last year, just this recent year. Than there was in 2011. One thing I want to point out about palladium, where I think this could super spike, they show Russia. This gray, it means it's palladium, right? Russia is 41% of the globe. Of the globe, there's only one mine in Russia. It does 39% of the global supply of palladium, Norilsk mine. It's so heavily polluted that not even one tree grows within a 20-mile radius of the mine. They have to pay the mining workers like twice the salary, and they still can't keep the place, with enough labor. The way the mine, I think, was opened in the 30s or what, I forgot what it was. I think palladium was started to be mined in like the 1930s. Now, what they used to supply for labor for the mine when the Soviet Union was around, it was gulag labor, free labor. So they accumulated stockpiles of palladium in the 1930s, 40s, 1950s, 1960s, 1970s, to late 1970s, whatever, when they came out with catalytic converters. But palladium usage for catalytic converters didn't come on till later, much stronger. Usually, well, in the beginning, it was mainly platinum. Now they go more to palladium because it's less. But all those stockpiles increased over all those decades because they were using free gulag labor. Nobody knows exactly how much is in those stockpiles that Russia has. So like in 2012, they dumped on the market also too, and also in 2011. So that's why you saw some of these price dips. But it's rumored that they're running out. But if there's ever a problem with the mining in Russia, in that one mine, anything happens, the price of palladium will go double, triple, quadruple the price of gold in short order, like nothing. That's just the type of move that I would hope for, that something like that happened, because if gold is at several $1,000s an ounce, and there's a hot war going on, and Russia decides to cut off exports to the United States of palladium or something like that, you might see that stuff go some crazy astronomical price, and that would be the time to unload it. That would be the time to unload it. Now, what your next move could be, it could be anything, but I'll get into that. It could be anything. But I would even say, if you have silver and you sold so many ounces of silver, and it was up at $70 an ounce or something like that, and you decided to sell a few dollars, a few of them, hey, you could buy furniture with it. Maybe the furniture stores are having a horrible year and everything's discounted 50%, so silver went up, doubled, and you bought some furniture with it that'll last you for years that was on 50% off, right? I mean, that's not that stupid to do. And I'm not talking about all your silver. I'm talking about a small portion of it, so, or whatever. Now, again, I want to mention that, watch the silver-gold ratio. It's been in a long correction period here. And do expect, I think the next time we have a major correction, that silver-gold ratio is going to be below 30 to 1. It got down to like 31 to 1. I think it's going to get down to about 28 to 1. See, when this ratio gets real low, that's when I get nervous about silver. But right now, I'm not. It's just in this long-ass correction period. So I wouldn't worry about it too much, but I think it's going to start heating up here soon enough. Maybe there's going to be one more dip before like April or May or whatever like that. I don't know. But maybe not. Maybe not. That's one thing nobody knows for sure. And, I don't do too much on tech analysis here, but I try to read what some of the people are saying, because sometimes I realize I think there's more that they understand than they let you know. A lot of the experts. One guy I think that reveals the most and gives you straight, honest scoop all the way is Mark Faber. So I pay attention to every damn word that guy says. I don't do a lot of tech analysis, because sometimes what happens is I realize there's a lot of outside events. And the one tech that I really have a lot of faith in is Fibonacci, because it's obeying the laws of nature. So, the next real serious fib point for silver, when I think it gets really heated up, in other words, after it blasts through 50, the next fib point after 50 is 75. But I would be selling probably a little over 60 in small steps. But the word is some, not a lot, not a lot. And hopefully I could buy some of it back if it drops down below 50 again. I would expect this to happen, but I don't know this for a fact. Now, I don't actually look at MACDs, anything, or examine that type of stuff, because I don't know. I mean, I looked at what Brother John F. did a lot with the MACDs, and I never really saw. It's about 50-50 with the predictions, and sometimes they seem like they're right, sometimes they're not right. But, we could look at MACDs like this and say, well, MACDs, there's a silver chain, there's 3 chains, and they're smiling off the MACDs, so it looks good for MACDs right now, and it looks good for silver. So that's one way I can look at MACDs. But, actually, I'll tell you the truth. I think of all the Fibonacci is actually the one technical thing that probably plays the most importance when you're looking at a larger picture. It's kind of hard to tell, like if you're looking at the short term, but over the long period of time, I'd have to say Fibonacci works the best, and markets obey the laws of nature. And you know, being somebody that was into mathematics so much, I realized Fibonacci is just everywhere in nature, no matter how you look at it. And it seems to, you know, even people that didn't understand they were using Fibonacci, like artists and stuff, where the center of focus was on the paper, on the painting. It was Fibonacci was always the golden rule that was seemed to be employed, whether they knew it or not. So, you know, I think, you know, what I'm looking at is when 75 gets near that point, that's maybe going to be the next major correction. I don't think it's going to go to say 100. But, you know, in the way silver moves down, when it moves down, it moves like a rock. You know, if the market's getting up around 60 or so, I'm going to sell a little silver, a little physical silver in steps. But, you know, as far as MACDs, the MACDs do look good. And the silver chains are smiling. So that's all I got to say about MACDs. And, you know, another thing, like I said, just to recommend Old Bicycle, because I'm one that's into like saving a couple bucks here and there, because I know right now the weather is horrible in most parts of the country. Now in Florida, it's sunny and about 70 degrees. So you definitely can use a two-wheeled mode of transportation out there. It's always saving $1 here and there and getting some exercise. But just chill out. Don't worry too much about the silver, like going down to 22. I don't think that's going to happen. I think a lot of people, silver's almost been like poison ivy. You know, it's gotten under their skin. It's like, you know, it's like they're looking at the price too much, or they're trying to reassure themselves that the, you know, it's how many ounces you have, not the price. Well, it is the price. You know, let's not kid ourselves. We want the price to go way up, as long as you're into it. You know, but and then when it goes way up, you're afraid to sell. Basically, silver is almost like poison ivy. So, you know, don't let it get under your skin. You know, you control it. It doesn't control you. And at one point in time, it's going to be you're going to part with it. But this isn't the time. This isn't the time. You're going to be afraid to part with it if it gets overheated. I know. If it gets over 60, you're going to be hoping for 100. I don't know. I'm going to watch that Fibonacci. I think that might be the next hard reset at 75. But I'll sell a little before then in steps.